Welcome to the Canadian Investors course, the Introduction. Please read slide 2 along with me. Terms of use and disclaimer. The content of all videos or articles produced by Trusted Wealth Professionals (TWP) or the Financial Literacy Learning Center (FLLC) are for educational purposes only. All ideas, opinions, and/or forecasts are for informational purposes only and should not be construed as a recommendation to invest, trade, and/or speculate in the markets. Any investment made in light of these ideas, opinions, and/or forecasts expressed or implied herein are committed at your own risk. The Trusted Wealth Professionals (TWP) website and FLLC website and its publishers will not be held liable for any investment decisions made by its viewers or subscribers. The author of these videos and articles does express certain opinions in the contents of the videos and articles, but will not assume any responsibility for the actions of any viewer or reader who acts on this educational information. The author of these videos may or may not hold positions in the financial instruments discussed in these videos. Investing involves various levels of risk. Future results can be dramatically different from the opinions expressed herein. We strongly believe in the use of an investment professional before investing. Not all advisors are alike. We hope you view our sessions 8 and 9 on the investment industry to become fully aware of all the types of various licensed investment professionals operating in Canada, along with the fees that they charge and how they're compensated, as well as what services they can offer. Once again, the contents of this website and all videos and/or articles produced by Trusted Wealth Professionals (TWP) are for educational purposes only. This course complements Canada's Task Force on Financial Literacy, launched by Canada's Finance Minister James Flaherty on June 6, 2009. Here's the overview. First of all, this introduction. Next, most sessions will be accompanied by a commentary session. These commentaries will supplement the basic learnings in the accompanying sessions. They may change from time to time. They may include ideas for you to think about. It needs to be re-emphasized that these are definitely not do-it-yourselfer tips. These ideas and concepts to think about and possibly implement once fully understood and after confirming that they're appropriate strategies for the reader or listener through a discussion with your trusted wealth professional. Clearly, it would be most helpful if your chosen advisor were also comfortable with the strategies and licensed to manage them using a cost-efficient program. If your advisor does not meet these criteria, you may be ready to consider a change. The commentaries may change from time to time as investment conditions warrant it. To quote a tried and true investment adage, as conditions change, adapt. What may make sound sense to an investor in today's investment climate may not when the climate changes. For example, deep in a bear market, the commentaries may highlight a strategy which could be extremely favorable in that unique climate, and it might be a fabulous topic of conversation for you to have with your advisor. It's hoped that the commentaries may trigger excellent discussions between you and your advisor, your trusted wealth professional, to help you build that relationship. We hope that they might help you reset your thinking to get back on course, perhaps after a market wake-up call, when you realize that, as we will say several times in this course, it's not different this time. The objective of the course is to help people separate their emotions from the realities of investing, hopefully to free their minds and stay open to always acting rationally to preserve and maintain the health of their portfolios. We encourage you to return to this course over and over again and look for the updates in the commentaries and perhaps elsewhere during or after major changes in the markets. Also, don't expect to assimilate all the material in your first viewing. Almost no one does. The first session's on income investing, specifically short-term income. Second session is a follow-up, continuation of income investing, now on medium and long-term income, and also looks at preferred shares, the dividend tax credit, and how to profit in the bond market. Session 3 is an introduction to equities. We talk about the capital markets, the stock market, commodities, REITs, and income units. Session 4, finding stocks to buy and sell. We'll talk about the balance sheet and how it relates to your own personal financial statement. Fundamental analysis, we'll talk about some useful ratios to be able to analyze a stock and understand how that's done by the professionals, as well as technical analysis, which looks at the market sense of where the stock is going. Session 5 is on the economic cycle, how it relates to stocks and bonds, real estate and commodities, as well as the yield curve, which is a valuable warning signal. Session 6, first session on financial planning. We'll talk about your balance sheet. We'll discuss how you determine how much you'll need. We'll talk about reality and human nature. Session 6 is a continuation on financial planning. We'll talk about some insurance products, including annuities, short term investment, term insurance versus universal and whole life insurance, sheltering money, and some tax strategies. Session 8 is the investment industry overview. Session 8 and 9 are hot topics today. The investment industry overview will be an overview of the industry itself. We'll talk about who the players are, who the licensing bodies are, and how everybody gets paid. Session 9 will talk about investment industry fees, investment account fees, as well as investment product fees, and guidelines to help you choose which products and accounts and so forth are appropriate for you. In Session 10, we'll talk about packaged investment products like mutual funds, wrap accounts, and ETF. Section 11 is a continuation on packaged products. We'll talk about guaranteed income products, closed-end units, and structured notes. Session 12, we'll talk about options, how they work, how to use them as a conservative investment strategy, how to generate income using options. Session 13, investment portfolio construction. We'll talk about asset allocation. We'll talk about constructing a customized investment portfolio. Session 14, we'll look at some investment strategies. We'll discuss the pros and cons of a balanced fund and portfolio and why it might be risky going forward. We'll also talk about buy and hold investing and the risks that we see in that strategy going forward. Session 15, we'll talk about rules-based investing. It's a strategy that combines fundamental and technical analysis, hopefully to smooth your returns and reduce the drawdowns that your portfolio might experience in bear markets. Session 16, we'll look at measurements. We'll talk about the Federal Reserve and some long-term indicators that you should keep an eye on. Finally, Session 17, psychology. We'll talk about you, your emotions, and how you and your advisor should fit together. Now, what's investing all about? Well, investing involves some level of risk. So it's risk versus guaranteed. Investing helps manage inflation. It attempts to grow your money, and it requires knowledge, patience, and discipline. So, what do the investment objectives consider? Well, first of all, safety of principal. How much are you willing to lose? Income. What income do you think you're going to need to receive from your portfolio, if any? Growth. Do you want your assets to grow, or are you more focused on having guaranteed investments? Liquidity. Are you going to need some cash at some point? How difficult would it be to raise that cash? Can you switch between your investments easily? Knowledge. You need to know enough to know what you're doing and know what you own. Finally, access to product. It may be better to put yourself in a position where you're not restricted from the investments that you might need. So retain flexibility. So what kind of risks are there? Well, there's liquidity risk, which is availability of capital, maybe buying an investment that can't be sold easily because the market conditions are unfavorable. Interest rate risk is what happens if interest rates go up and down? How does that affect your investments? Inflation risk. Well, that's the buying power of your investments. Are they keeping up? Is your buying power being maintained, or is it being eroded? Then there's reinvestment rate risk. Are all your investments, do you have a bunch of guaranteed investments all maturing at the same time? Or do you have them maturing at different times so that you reinvest at different times and you're not subject to a one-time effect in the market? And finally, bankruptcy risk. If you own stocks, it's obvious. Clearly, if you own a stock, and stock ownership means ownership in the company, if the company fails, your stock goes to nothing. However, you also have to consider bankruptcy risk if you're buying guaranteed investments. What's the risk that the institution that you bought your investment from should go bankrupt? And if that were to happen, would you be protected? So the risk range is taking it from high risk to low risk. Obviously, the highest risk are futures and options, less risk in common shares, real estate, and precious metals, less risk again in preferred shares, little bit less risk than preferred shares in corporate debt in most cases. Then even less risky GICs. Finally, government bonds, money market, and treasury bills are the safest, closest to guaranteed product. As well, age is a factor. When you're young, you can afford to take more risk because you've got time to repair it. When you're old, less time to repair it, you should take less risk. So between 20 and 35, taking high risk makes lots of sense. 36 to 49, probably medium to high risk. 50 to 65, medium to low risk. 66 to 70, and for some people beyond that, probably low risk. And over 71, if you know you're going to need all the money, probably no risk or little to no risk at all. Anyway, that's the end of session, the introduction to the CIC course. We hope that you'll join us for the future sessions. Thanks for listening.